Just messing with
Just bargain.
Gotcha. All right. Okay. Ready.
All right, ready. My name is Christopher Wade Chapman. I go by Wade, my middle name. But according to the state of Ohio, if you're licensed insurance agent, you must have your first and your last name. But you can call me Wade. You can call me Chris or Christopher, whichever one you prefer. I might not respond because the only one that calls me Christopher is my mom. And usually only if I'm in trouble. Yeah, that's the whole name. Youngest of 5 children, graduated from Hamilton High School, went on to Ohio University for a year in business engineering, then left there to go to Anderson University in Anderson, Indiana, graduated with a marketing degree, later went back for my master's degree at Xavier University, and then about 10 years of computer programming. I found Nationwide Insurance, and that's the short version. My goal, my purpose here is not to really sell you anything. It's really just an educational purpose, just to look out for you. So my big question is, are you covered? That's the question I have for you. I've just been listening to some of your conversations. I've been eavesdropping. You're very passionate. I've been picking up on some of the lingo too, some of the DJ lingo, talking about controllers, tablets, and external hard drives and things of that nature. All are really expensive things. So there's a line where you talk about passion, then expenses too. So a lot of times you might consider, or you might assume that your homeowner's policy or a renter's policy, if you have a renter's policy, that your possessions, that your goods would be covered under that. And that could possibly be a misconception, which could ultimately cost you a lot of money. Who in the room say they would have like maybe $1,000 in the sound equipment?
Easy.
All right.
Easy.
Right.
That's right here.
Yeah. Exactly. Right. So a $2,000 laptop, that's not uncommon, or $2,000 equipment, right?
That's not uncommon at all.
Do you know what would happen if you left it in your car, someone came out and stole it, and you went back? Would it be covered on your homeowners?
No.
So, do you know the difference between having a scheduled property versus a blanket policy?
No.
All right. Blanket policies is basically what you have on your homeowners or your renter's policy. It's a blanket policy, meaning that if something was to happen to, in most cases, it has to happen to the home for it to actually be covered. So if you have a fire or something like that, and then even then you have set limits as far as computers. It might only be 2,000, 3,000, unless you request it. It may be higher. Normally it's very low. So theft is a scheduled item. Theft is a whole nother peril or a whole nother form of loss. So although you might have coverage for fire, your theft deductible or your theft coverage might not be as high. So if you have, let's say, a name brand, like these two are apples up here. I'm not sure what year they're made in, but under a homeowner's policy, a blanket homeowner's policy, if that was to be lost in a fire, they would actually, they come out, and that's the other thing I wanted to point out. Insurance companies are great, and I probably shouldn't say this, but they're not in the business of paying claims.
Oh, we know that.
Right.
They're in the business of collecting claims. So there's another reason I want to bring that up, because anytime you have to turn in a claim especially under your homeowner's policy, that does count against you. So if you get too many claims, guess what the insurance company is going to do?
Drop you. Oh yeah, or raise your premium.
Or raise your premium, or both. They might raise your premium, then the next year drop it. So it happens. It does happen. So when you have something that happens on the home or happens to your personal items, and you turn in a loss on your homeowner's policy, it counts against you. So all the more reason to look into or ask your agent about a scheduled property or inland marine policy. So what that does, it can have a whole separate deductible, but it's going to be scheduled for the value of the item, as opposed to a blanket. Like, let's say the example I was giving before, the computer burns up. So the adjuster comes out to your home and says, okay, you lost the computer. You tell them what year, I bought it in 2011. I paid $3,000 for it, hypothetically speaking, and the adjuster said, okay, well, let me see. Let me factor in the depreciation here. Yeah, that comes out to about $900.
Right.
So, can you buy a computer for $900 to replace?
I want it
Comparable.
not for what we use.
So
that doesn't include the music,
all that, yeah, exactly. So you want to make sure if it's scheduled, if it's a scheduled item, if it's scheduled for a value of $2,500, that's what they're going to look to replace it for.
Okay.
And I can tell you from my company experience, about $3,000 in scheduled property costs about $35 a year. So, is that much? Count that per month? It's an inland marine policy. And what an inland marine policy is schedule your property to the value.
Inland marine?
Inland marine. I-N-D-L-A-A-N-D.
So you said $3,000 worth of property covers for about $35 a year?
Right.
Dang, man.
We use these for diamond engagement rings oftentimes. For people that have antiques or collectibles, we use them for that, for those kind of items. And it's nice. And the nice thing about it, you can set it a separate deductible. Like your homeowners, it might be $500, it might be $1,000. So if you have a loss of $2,000, are you really going to turn in a claim?
Right.
Because you're only going to get $1,000 out of it.
Right.
So, but in the marine policy, you can have a $0 deductible. You can have a $500 deductible. You can have a $250 deductible. You can set your own deductible. And the nice thing about it, if you do have a claim, it doesn't count against your homeowners.
Is it like a per item thing, or is it like a collection thing? You get the value of everything.
It is. Now, make sure I
Like, for
understand.
somebody like most of us that have like a lot of equipment, a lot of speakers, a lot of computers, things like that.
Yeah, you want to itemize, because that's the advantage of having it in the marine. Is if it's itemized, it's going to be scheduled for that item. So you're looking at replacement costs for each item.
Can you spell that again?
I-N-D-L-A-N-D.
Okay.
Actually, I'm sorry, I-N-L-A-N-D. I put another D in there. Sorry, that's.
And in marine, you said
Yeah.
marine.
In the marine, that M-A-R-I-N-E.
Okay, E.
Yes.
Okay.
So do you have to have homeowners insurance in order to pick up this policy?
You do not have to have specifically homeowners insurance. You do need to have. Well, it depends. With Nationwide, I can broker some policies if Nationwide doesn't have an interest for it. So, standalone in the marine policy is not something Nationwide would do, and most insurance companies I don't know that would do it. But through my brokerage company, there's a company called Scottsdale. We can do a separate in the marine policy.
Could you have it alongside renters insurance?
You can have it alongside renters insurance stuff.
It needs to be attached to a major policy.
Yes. Yes. Mm-hmm. Yeah. So, any other questions about that? Great questions too, by the way.
So if let's say, for instance, if Nationwide covers do they cover autos?
Mm-hmm.
So if you got an auto policy, and let's say you just want to get the inland marine policy for your DJ equipment or something like that.
Yes. As long as you have, and
so
that's
that
a
would
good
be like a
question.
rider?
As long as you have, it's not a rider. It
Okay.
is a separate policy,
Okay.
but it's not. You can't just do just an in the marine policy.
Right.
You got to have
Okay.
some other business with the company. And if you have an auto, we would look at doing an in the marine policy for you. Yeah.
And would I be correct in that, given some folks that may not have renters or may not have, or I have a need for homeowners or whatever the case may be. Obviously, we all probably have a need for automotive, but if they could attach that also in some way with their business liability policy.
Now that's another great question. Now, business liability policy is an awesome tool, and I know oftentimes it's overlooked because you're not thinking of yourself as the one that's hosting the party per se or going to the event. You're just invited to the event, but you really ought to have some liability, some general liability of your own. So, and with the general liability policy, usually you can have a separate in the marine policy to cover your valuables.
Can you
Through that same
explain
cover.
what that is? For
Yeah. So a general liability policy is going to be just that. It's going to be like if something goes down at the party, and for whatever reason, they're going to blame you. Even though it could possibly not even be your fault or you had nothing to do with it. You could just be pulled into the lawsuit. So even being done that way, a general liability policy is going to cover like your attorney fees and those kind of things. So a general liability policies usually start around $300,000 as far as coverage up to $1 million. So if you're sued, basically, or you're named on the lawsuit, the general liability is going to help cover some of your expenses.
Okay.
Yeah.
And what type of policy? I had a situation where I was DJing a party and someone fell into my table, and I just bought a brand new mixer. And I mean, it just literally damaged a button that I can't repair because
Right.
it was not a replaceable part.
Right.
What type of?
That would be either a commercial property or in the marine, because
Okay.
that's going to cover your now on the flip side of that, let's say that person fell, hurt themselves, and said it was your.
Oh, she was drunk. So.
Well, I've had some strange
I'm
examples
sure.
of where actually in my studies, a gentleman actually broke into the house, broke into the garage part through a skylight, fell onto the cars, and the people were away for the weekend, but they had fixed the lock in a way that it could not be undone from the inside. Don't you know he sued them because he couldn't get out and he was injured. He sued them and won.
Wow.
So, so a liability policy. So, like in your example, you know, a person that's drunk fell down,
That's crazy,
hit your
yeah.
table,
That is
hit your table, and they could turn around and sue you and say, "Well, your equipment hurt me."
I've broken your home and couldn't get
Your
out.
laser light blinded me. That's
Right.
why.
That's ridiculous.
It happens. People are so sue happy right now. You get sued for anything.
So a business liability policy, how much would one of those start out at?
I really have to quote it to find out for sure. I mean, it could be. I know the minimum liability minimum policy is usually like $500 to $700 a year is the minimum.
Okay.
So it depends on the carrier and what they would assign the risk for.
Now this might be kind of strange. We're gonna throw this out there so the group can hear this too. I had a buddy of mine tell me, and I actually just put this in my contracts because I could run into it. What type of insurance would you need for something to cover you? I had a guy who tell me that somebody had epilepsy, and they went into a seizure because of a stroke,
Yeah.
and it wasn't in his contract. And he got sued for it.
He can get sued for it, but usually law is based upon.
You're supposed to have a disclaimer in your contract.
Right.
Wow.
The law is usually based upon what a civilized person, I forgot what the term is that they use from old England, but a person going to a party should know that there's a chance that there might be strobe lights there.
Assumed risk is what you're dealing with.
That's not the word.
But if
it's
you go to
different.
like a concert or anything like that, they put up disclaimers for that very reason. I put the clause in my contract, and now I ask, just to add, but it is in my contract under special provisions. What type would you have to have something that would cover you or for something like that? I don't.
General liability.
A general liability, but I'm not. That's almost a legal question.
Okay.
So I'm going to plead the fifth on that one. I'm not going to comment on it because I'm not a specialist at the legal part.
Okay.
But it is a great thing to have in your contract. I mean, it's a great thing to name. I mean, more precaution. It's one of those CYA things. You just want to make sure you're covered.
Okay.
Man, you almost have to put everything in there.
Hey,
That's kind
well,
of like, I guarantee if you sweat your weave out, it's not my fault.
Right.
I'm not responsible for your hair.
I do have a friend that actually went down at Brandon, he was doing
Keeps it real.
He was standing near the speaker, and he lost his hearing.
And lost his hearing.
I do got another question too.
Okay. How you doing?
Hey, how you doing?
So if you wanted to do one of these inland marine policies, I have homeowners insurance, but I'm trying to get my wife to move on our homeowners insurance. It's like an act of Congress. So if I did like I'm in the market, I'm going to be in the market to increase my life insurance. Could I attach it to something like that? Because I can't move my homeowners insurance. I can't move my car insurance.
You would be interested in a standalone in the marine.
I just can't do that.
Through Scottsdale. From a broker company. I could do it.
Okay.
Scottsdale. That's one thing I want to make sure, because I did kind of say, hey, you can do a separate inland marine policy. I just can't do it with my major carrier. I can do it with one of my broker carriers. Okay. Other point, I'd like to mention life insurance. If I was to tell everybody that, if I was to tell everybody that I have a printer in my garage that prints $100 bills whenever I need to go get some money. This is fictional, by the way, so don't follow me home.
Right.
But if I was to tell you that wouldn't you think that would be a great asset to have a $100 printer in your home that can just print money whenever you need it? Yeah. And wouldn't you also think that, well, if you have a $100 printer in your home, you would probably want to get insurance on that in case something happens to it. You don't want to lose that $100 printer.
Right.
Well, same thing about life insurance, folks. Same thing about life insurance. You are the money maker. If you're that money maker, you're going to make sure, you need to make sure that you have some kind of life insurance. There's term, there's whole life, there's universal, there's different ones out there. I've got a pamphlet back here. I'm going to hand them out so that you can educate yourselves and find out what the differences are. But you got to have something so that if something was to happen to you and you leave this world, what kind of condition are you going to leave your families in? You want to make sure there's something there. Anybody questions on what difference between term and whole life?
Yeah, term.
You got term? All right. If you don't mind me asking, what's your age range?
I'm 37.
And how long was your term?
I think it was. You give me the job of memory.
Okay. If you have term, I've got term myself. Term's a great tool.
I think it's 20.
It's very inexpensive. But it doesn't build any kind of cash value. So it's great though if I'm 40. It's the same age range. I'm in the primary earning years, so I need to have a bigger term because you can buy a lot of term. You can buy $250,000 worth of term and spend at my age like $20 a month. Very inexpensive.
I just want to know outside of what my job covers.
And yes, definitely have it outside of what your job covers because guess what, folks? Unless you're in the unless you're in my father's generation where he could actually keep some of that life insurance when he leaves. Most jobs not. Yeah, not today. Not today.
But now if you have term and say you're 40 and you have a 20-year term, then does it expire when you're 60?
Good question. The thing about term, at least with my company, you can convert it. Okay. So if you have a 20-year term, you have 15 years to convert over to whole life.
Gotcha.
And they use credits too. So if you wait till year 15, they'll use so much credit. It's not cash value, but they'll use that credit to purchase the whole life.
Gotcha.
Yeah. So, and you want to get whole life before you wait to like 65. So that's what a lot of people are doing now. Like they wait till they retire, then they want to get, and I show them the quote, and they're like, yeah, they're like, how much? Yeah. So you want to definitely get a whole life when you're somewhere in the 40s, 30s, somewhere right there. At least a 15,000. Kind of do like the basic burial expenses.
They say that's one of the main mistakes that blacks make is not having life insurance.
Oh my goodness, it is.
My clients, my white clients, when a relative dies, they're collecting money. Black folks, when somebody dies, we are collecting money for the funeral.
Absolutely, and I cannot tell you how many funerals I've been to. They're passing a collection plate.
A white guy told me that. He said that's one of the biggest mistakes that black people make.
And for the cost of a candy bar and a soda a day,
stuff that we waste.
Stuff that you waste.
Yeah.
And I'm probably going to waste on the way home. I'll grab a hamburger or something. But life insurance is very important.
Which policy is it that builds equity?
Whole life.
Whole life.
Whole life and some universal lives will build. Now some universal lives, you can actually attach a long-term care rider to it also. So if you do end up like going to a nursing home or something like that, that's another thing that a lot of people don't consider. And if you do end up going to a nursing home or something like that, that's going to drain your assets very quickly. Our whole life, our long-term care riders are indemnity style, so they pay the person and not the facility. So you can get anywhere from like $2,500 a month or higher, depending on what your limits are.
Isn't it any point where it's too late to get insurance on, say, your parents or somebody who's elderly?
I can write a policy up to a whole life policy up to someone that's 85.
Really?
Right.
Okay.
It's high, but I can do it. But I can do it.
Okay.
So what would be like the difference between, I know you talked about the inland marine insurance. What about like just general insurance for your business? Is that kind of the same
That's
thing?
the general liability. There's a general liability. There's two parts of insurance. There's the physical part of it, like the physical equipment kind of stuff. And then there's also like the liability. So the liability, the general liability would be one part, and then you would also need the second part, which is the physical part, which would be either commercial property or inland marine.
So what does the general do? What's the difference between? I really don't understand.
No problem. So a general liability is going to be like if someone sues you, basically. That's simplifying, but if someone sues you for something, or if you're brought into a lawsuit from the facility of something. So if you're found liable, whether or not if you're found liable or not, the general liability policy will benefit you. But if you're found liable, that keeps them from at least attacking your personal assets. So if you're found liable, they win the verdict of $700,000. You know, are you going to just run to the bank and say, "Oh, okay, here, I've got $700,000"? No.
Runs
You
on the
know,
board.
so they're gonna put liens on your property. They're gonna, you know, so a general liability is gonna pay for that to keep you, you know, afloat.
I got you.
Other questions? All great questions, by the way. I got you thinking. That's the part that I told you. That was my goal, is to get you thinking. You know, thinking about and planning. And if you want some more information, I'll be happy anytime. If you want to sit down and talk with me, review your insurance. You know, you can bring me your deck pages. I can tell you if you're getting a good deal.
I do got one other question. If you're going to be covered, you have to be, does your business name have to be covered? Like you have to actually have like a federal tax ID, all that good stuff, or can it be just you?
It can be
you personally, or
it can be a DBA, so doing business as. So you don't necessarily. I mean, and that's more of some of the accounting
I just know
and legal questions.
If
But
you could
as far
tie
as
insurance over that.
right? We can name you as the, you know, doing. It would be you. It would be your name doing business as DJ so and so.
Okay,
Yeah. So it would be in your name, but it would be, yeah.
I got you.
Now, the inland marine, it covers, like you were talking about, whether the equipment is in your home or in your car.
And that's another, yes, it covers wherever the equipment is at. It doesn't have to be something that happens to the home in order for it to be
Okay,
covered.
gotcha. Okay.
Thank you for that. I meant to point that out. All right.
Cool.
That's my list. So thank you so much for listening.
Thank you for coming.
I'm going to pass out some of my cards and some of the information. Like I said, if you have questions, follow-up questions, think of something, feel free to email me or give me a call. I'll be happy to answer. All right? Thanks again.
Appreciate it.